This is Pete Moore. I am here on Halo Talks NYC with Chris Cozzone of the Bain Capital Double Impact Fund. Chris, welcome to the show.
It's a real pleasure to be here, Pete.
Excellent. So what we're going to talk about today is investing in the Halo sector, previously known as the wellness industry. And we're going to talk about how Bain came up with the desire to set up a fund specifically towards impact investing, and talk about, some of the things that you look for in businesses and, what kind of characteristics you require and what you find in order to get excited about going to investment committee, getting on their board and creating big companies. So why don't you first talk about your background growing up in France, going to Stanford, and give our listeners a little lens into you as a person.
Awesome. Well, again, it's a real honor to be on the show. Briefly about my background. I grew up in the south of France. Being French American from an American mother, and she comes from the south of the U.S., so an interesting mix there, and have been exposed to the southern food as I grew up in the U.S. and the southern Mediterranean food in France. So that's probably the biggest point of my personality that you need to know. But I studied engineering and economics in France, and right after that, my first job was actually at the World Bank, and that's important to know because the idea of how we can use big organizations to kind of solve social environmental problems was a bit of the heart of my career. And that was, my first job. But very quickly, I was more interested in the power of how the private sector can do that. And fast forwarding, went to consulting at Bain & Company and joined Bain Capital in 2011 and was lucky enough to be one of the early joiners of Deval Patrick, who's a popular two-term governor of Massachusetts. And when he left office, he joined Bain Capital to build this new team. And so being passionate about entrepreneurship as a Stanford graduate, I got to do what I think consultants call intrapreneurship.
Intrapreneur.
Exactly. So managed to start a new business unit under the leadership of Deval, which we ended up calling Bain Capital Double Impact. Not because we love the Jean-Claude Van Damme movie Double Impact, which
yeah.
Not about that, but more about the idea that we can use, again, business to solve social environmental problems. And so what do we do? So we support mission-driven founders through investments of between $10 and $50 million and help them grow their businesses. What mission-driven means is that, more and more, I think, in the business of Halo, as we call it here, a lot of founders kind of want to not only make money, but, have a mission to, make people eat better or have more fitter people or, maybe just personal passion. Yeah.
Gotcha. How do you balance? When is it? Well, let's first start off by telling people like the initiative of a impact investing fund, and there are several in the U.S. and they keep cropping up as different types of funds. What is that? What are you allowed to do, and what aren't you allowed to invest in? Just to make it clear. And what gets through investment committee, and what's like, hey, that's a nonprofit.
Absolutely. So what is clear is we committed to our LPs, to our investors, that we're promising the same types of returns as any fund. So to answer your nonprofit question, we are looking for going concern businesses which are, have sustainable business models and are profitable. We do have an additional filter that we look at when we get, when I get a new company on my desk or by email, I need to understand for myself with the help of the team, and we have very clear processes on these, on whether or not this is a business which is solving a social environmental problem. So that's, we call it our impact screen. So we'll put every company through an impact screen. What is different than any other investor is one, this impact screen. The second thing is we need mission-driven management. So if a CEO does not really care in the mission, we're probably going to have.
It's not like a marketing message that's kind of falls dead on arrival.
Exactly. And part of our due diligence process, which is, an extra layer of due diligence, is we're going to have a lot of these conversations, and we're going to try to align and understand where do you want your business to be in 2 years, in 3 years, in 5 years. And what's been really fascinating is I think, with the millennial generation growing up, and there are more and more kind of CEO owners who, just care about, what their company is doing. Sure. There's a lot more pull for our type of capital. People care who are going to be their partners, and hopefully bring their business to reach their mission and solve the problems that they wanted to solve.
So when I was in business school, as you were, we used to have classes about, some famous capitalists have said, look, a business is made to make money, and you could take your dividends and you could take your profits and basically do whatever you want with it on a charitable basis. But like a business is not set up to create a charitable organization. Having said that, obviously from a marketing standpoint and from people doing good and from the demand that there is in the marketplace, obviously this resonates into sales. But maybe talk a little bit about how you've had to kind of you've modified your lens to the point where if somebody comes to you with a company and it's like, okay, for every shoe, set of shoes that are bought, like there's a pair of shoes donated to someone else or a pair of eyeglasses or whatever it is. How do you think through like what's like the appropriate amount of charitable contributions, and how do you think about like, okay, someone says like the percentage of this profits is going towards this cause. Like I've seen people say 2% of profits go towards this. I'm like, well, that's not very meaningful. 20%, that might be a little much, so how do you guys think about that? Or how should entrepreneurs think about like, okay, I want to do a social good, but I also need to have a commercial understanding of my business, and I can't push it too far because I might push guys like you away.
No, that's a great question, and a lot of economists are scratching their heads on this one, on how can we create this the proof points here. I mean, going back to your first statement, I think that was Milton Friedman in the 70s. He came up with this view of capitalism, which was very different than how capitalism was founded. In the Adam Smith days, and even before that, all these economists actually cared about the stakeholders, is a technical term. So your employees, your environment, your suppliers, your community, and of course your customers. So what we're sharing right now, and what the idea that we're pushing is, there are actually intrinsic benefits long-term to your business if you are treating your customers well. And that's, that can be through, just if I'm selling a better for you piece of food to you, Pete, or a meal, you might be and inspiring you that into values that you care strongly about as a person, you are likely to be more loyal and likely to be a bigger advocate. For my employees, if I'm inspiring them through the purpose of my business, which is an authentic one, and they want to work for me, they might be less likely to turn over and go to another business, and they might want to be more creative and go the extra mile and invest more of their energy in the business. My suppliers will be stickier. If I'm taking care of my environmental footprint, I will reduce my cost footprint inherently. If I'm shortening my supply chains, I'm saving costs. So there's actually a lot of alignments in just basic business practices, which are good with social outcomes, environmental outcomes, but also I can eat at the end of the day through my bottom line.
Sure.
And that's really kind of what we're proclaiming. That does not always work, by the way. So we're not going to invest in a chemical plant polluting a river and necessarily say we're going to make you stop polluting, change your whole processes, because that business just won't make money anymore.
Yeah, that would be like triple impact.
That would be triple impact, exactly. Right. A movie coming soon, maybe.
Yeah, right.
But what's fascinating for us is in investments like Impact Fitness or by Chloe or SRG, we can just tweak a little bit the business model there and make these businesses extremely more impactful.
So when you guys put capital into a company, obviously the company now has the ability to probably add more professionals, executives, maybe more even of a strategic approach to their business. How, from your standpoint of doing this for several years and from the other professionals at Bain Impact, what do you do once you're invested in the company to say, hey, look, you've made the screen, we did the deal with you. Yeah. Let me give you some more ideas of like how you can even be better with your suppliers. Maybe you can care about the environment even more, because we've invested in these other companies that have like this really unique culture, you could create a product, but it's very hard to create a culture, so it seems like you have to self-select the culture that they really believe in this, but also to maybe say, hey, look, this is what By Chloe's doing, or this is what they're doing at, the Planets, or, how is that How is that kind of DNA kind of, like operationalized
with Bain? So we like to be, we're never going to be, as I said earlier, the minority small investor. And there's a lot of capital like that out there. And, if that's the type of capital you're looking for, we might just not be the best suited. We like to be helpful. And we have 35 years of experience within the Bain Capital platform, which is, benchmarks. We've made a lot of the mistakes, the basic mistakes. So we try to remember those as an institution and not make them again, whether it's through operational practices and how your business works from the inside to, where to focus when you want to grow. And so that's more on the business level. And so, we're active on the board, in a business like by Chloe, I probably spend a day a week, spend. So
you want to tell people what that concept is? And
so by Chloe is a plant-based fast casual concept. And it's a really unique concept based. So it was founded 3 years ago, I guess 4 years ago now in New York City. It's scaled across the country in LA, Boston, Providence, and it's actually an international concept where we have 2 units in London, and it's going to be opening in other cities. What I personally love about By Chloe are 2 main aspects. One is just it's actually a true brand. And how do you measure what a brand is? Everybody wants to be a brand, and I think probably aligned with Halo, everybody wants to be a lifestyle brand today. It sounds really great, and I think it brings you a little bit more multiple to your investment or to the value of your company. I think By Chloe is truly a lifestyle brand. And how do you measure, whether your brand is, to me, is the idea that you can have permission to do things outside of your initial range of your product. And so a business like By Chloe can serve, is serving the delicious guac burger, which is, plant-based burger, which is a great alternative to the indulgence you'll feel by eating a Shake Shack burger, but also can provide some meatballs, some delicious cakes, et cetera, et cetera. So and stay tuned for a lot of innovations on the menu coming very soon.
Got it. So when you look at a company like By Chloe and they say, hey, we want X multiple for our business, how much work do you do, arithmetically, and how much do you say, look, you have a lens on the future? I feel like if you're in impact investing and what you've done before and your consulting background, and you say, look, I kind of know where the market's going, and I know where this company could be positioned in it. So maybe talk about, not only do they get, Bain's expertise and operational expertise, but you guys have a window into a lot of different companies, and you know kind of what they're planning, what their competitive factors are, and where they think the future is going. So if I had 100 companies and I had 100 CEOs and I said, what do you think the future is going to look like? And 75% of them said this, that would probably be a good mechanism to say, hey, I think this By Chloe is going to fit into these trends, and this is the right time to get in. So maybe talk about your lens on the future, maybe not just what you think, but what you actually know. If that's okay.
Interesting. So on your question, I'm hearing 2 different things, actually. Do you mind?
I'm asking 2 different things. I think one is there's a blue sky value that an entrepreneur wants for their business. Yeah. And I think you have the ability to say, well, historically that multiple or that valuation might not be reasonable. However, I know what the future looks like, and I'm willing to basically make a bet that this company is going to be that market leader. So answer that any way you see fit.
No, absolutely. So on your first valuation point, I would say, we just all fly to Vegas and put a ball on the roulette table and see where it lands.
Well,
and
sometimes the markets work like that, I feel like, right?
So hopefully it's not 36, because that's a pretty high multiple. But
it's good. It's good.
The
double zero
feels better to our investors indeed. But hopefully not our returns. But so the way we think about valuation is never really top down, and that's not the Bain Capital way. We really want to think about the fundamentals of the business and try, to your second part of your question, see where what's the business full potential, which is our internal lingo.
I like it.
And so thinking about the full potential, indeed, you're going to look at 2 things. I mean, very broadly, you're going to look at where the market's going and what the company can do within that. On the market, where the market's going, there's a lot of, and I can get to some predictions there. But maybe let's start with the company. On the company, while respecting kind of the confidentiality of all of the businesses we see, I can't unsee what I've seen. So, I have a view and I can, be a sounding board on, what the right P&L should look like, what should be the right unit economics, where has growth succeeded and failed in the industry. And not over the past 2 years, but again, thanks to not deals I made, but deals my bosses and predecessors made at Bain Cap, I have 20 years of experience there. So that's a lot of the value we can bring at the company level. On the market, I think again it depends category by category. I think when we're thinking through what we're trying to achieve as a firm investing in food, what fundamentally we want Americans to eat healthier and more sustainable food. That sounds like an extremely basic statement, but that's what what we're always solving for into our investments. And how do you do that? And so that the main term that the two main terms are, one is access, and access can mean geographical access, and it can mean financial access. The second kind of big family is education. And so you need, having, you can eat a burger, you can basically eat anything as long as you have a balanced diet and you don't eat too many processed foods. Right. And so we're really trying to push in that direction. And I think really the economy is going in the direction. But it's going to take a little bit more time than, frankly, I initially thought when I did some work 5 years ago on this space. Plant-based is growing like crazy. And, I won't even quote a number because I think there's one article every day coming out on how plant-based categories are growing double digits. Yet, we're the meat consumption per capita is the highest in 2018 that it's ever been in America. So, how can you reconcile these things? Are we just eating more?
That's probably the answer.
It's probably true. But so, it's sometimes hard to unpack a lot of the statistics. What we do know, though, is the health outcomes today in America, which are, you see in New York City, you've probably seen all these posters of a third of adults in America have pre-diabetes.
Yeah, that's why, we're going after all those people that sell processed foods, and they make you think that frozen yogurt is good for you, and it's got 66 grams of sugar. And this just as a sidebar, I spoke at this conference a couple of years ago, and I took a 16-ounce bottle of Mountain Dew. Yeah, and basically 4 grams of sugar equals a teaspoon. So I took the 16 teaspoons and put it in, and just showed people and shook it up. I'm like, this is how much sugar like the average person is drinking. Like how I won't use profanities. How is it possible that Dr. Pepper and Mountain Dew are the soft drink of the NFL? Like, do they not have any plausible deniability on why they would take that money when they know they're poisoning people? It just doesn't make any sense. So from a standpoint of like, when you look at the information and you say, okay, here's all these companies that are doing good things, and they kind of got their own little movements, and I hopefully with the Halo sector, we're going to try and get more people. It's all about education. I agree with you. How does Bain, as from a fund standpoint, like obviously you don't want to, you're kind of like the quarterback, and you don't want to like get in front of your investments. Yeah, but like,
I am a behind the scenes guy.
Yeah, behind the scenes. You're like the guy. I like to say the guy in the Broadway show. Like you just see the top of his head, and he's like conducting the whole orchestra and is controlling.
I hope I have such a nice suit than that person does.
Yeah, but I think you should get a
penguin suit.
No, a penguin suit. Maybe cut the sleeves off. Go sleeveless with some glow sticks, and you can like chime up the whole Halo sector. No, but like what role do you feel like your firm does or can do in saying like, look, we're getting our name out there, we're marketing on our double impact, and whether we get these deals or whether somebody else fund these deals, like this is happening and everything benefits us if people change their behavior.
No, that's a great question. And I don't think we're pretending that, through our investments in businesses of $10 to $50 million per business, we can change the obesity epidemic or solve global warming. We're not pretending that's the case. What we can do is help fund scalable models, which can start being, one of the instruments to pursue that. Right. So when we're thinking about By Chloe, I will feel extremely successful if 10 years down the line, in all across, America, in not only in the coastal cities, you have plant-based fast casuals and dedicated where, are not, gender biased, where, everybody goes and families go and sure. and that's in plant-based just becomes a normal point of conversation. And maybe By Chloe will be one of the kind of elements of the domino effect, which will make that happen. Right. So that, we need to trust kind of disruptive concepts and help them get, mature business tools as we've developed at Bain Capital to really scale these ideas. And that's really how we're thinking across our portfolio. And we've talked a lot about, by Chloe, but, there are a bunch of other
portfolio companies,
companies,
sure.
and Impact Fitness, which is a Planet Fitness franchisee, is one where, we have, in the low 20s gym units there open in rural areas and increasing access to gyms. And the examples we're setting on how we're running that franchisee have ripple effects on the 1,500 boxes that Planet Fitness has across the country.
Awesome.
What we're doing with some of our healthcare companies by trying to have best practice employee practices are hopefully contagious to the industry once we've proven that by investing more in your caregivers, for instance, that you have more retention, better productivity. So instead of squeezing those type of employees, which are critical to kind of the future of the healthcare industry in the U.S., people start cherishing them more and offering them better careers. So it's more setting an example and telling really these telling stories seems a little bit too anecdotal, but really trying to approve a few, kind of create a playbook where we have basically a catalog of good ideas that work and do that. But it's
Yeah, I think. I think all this is kind of like manual weapons of mass destruction against some of these processed food companies, and we'll get there. We need all of us out there doing our share, and I think it's starting to make a dent. I mean, you got 14 million people that belong to a Planet Fitness.
Yeah, it's nuts. It's bigger than most healthcare companies, which is.
So I think we're all going in the right direction. So why don't you just do a quick summary of, when an entrepreneur is at what size can they start talking to you about, potentially getting involved, size of the fund, and then we can, make sure that we get the right entrepreneurs over to your desk.
Well, thanks for the generous offer. So we invest across all sectors of the economy, actually. So Halo can mean many things. Halo can mean, I do want to start by kind of where we invest in terms of sectors. Halo can mean, food and CPG. It can be co-manufacturers within food. It can be processors, distributors. It can be gym concepts. It can be suppliers to those. It can be education companies and others. So we just want mission-driven management teams or founders who want to solve a problem and make money at the same time. They want to do good and do well. In terms of metrics on the investment side, the check we will write is for this first fund, which is a $390 million fund, are in between $10 and about $50 million. We look for businesses which are profitable. So we're not a VC shop. We're a growth and private equity shop. And so what that means is we can put money on the balance sheet to help you grow the business, or we can offer secondary, what's called secondary investments, which is basically provide liquidity to some of the shareholders, in exchange for a part of the business. And so when we're thinking about minimum levels of profitability, I think we're thinking in between 4 and 6 million EBITDA. So it's probably the minimum, and we can go much higher than that.
Great. So Bain Capital Double Impact is now officially Halo certified. And we want to thank you for being on the show and giving us some of your wisdom, and look forward to making a dent in the world, maybe even more meaningful as we keep making investments with guys like you.
Well, thank you so much, and I hope we get a logo for our website to be Halo certified, or a T-shirt or something like that.
Yeah, we'll get you an EPS file as soon as possible. Thanks for coming on. It's great to meet you.
Thanks a lot, Pete.
Thanks.